So our challenge is to share some interesting insights and maybe even entertain you with the following session where we talk about matching innovation vehicles to business outcomes from strategy to ROI. As you've just heard, I'm Julian. I'm a partner at Striber. We build ventures and venture studios for large corporates and investors. I've been doing that for about 10 years now and really across the globe. But very exciting to be here in my hometown now for the past 15 years of London and be chatting to you here. Before we get into the discussion, I think it'd be good if we can get an introduction from each of you. I think we'll start with Bruno because you're the only one who got the memo that we'd be wearing white polo shirts today. I said polo shirts, not shirt, but we'll get there.
Also mustache.
Mustache. Well,
I did read the memo. My name is Bruno Moraes. I'm a managing director of Vide Capital. Vide is the CVC of Telefonica. In the UK, our main brand is O2. If you don't know Telefonica. Yep.
And maybe during the introductions, in the interest of the session and the topic of the session, if you could all also briefly say what is the main business goal of your innovation vehicle?
Yeah. So our main business goal is to generate new business, new revenues for Telefonica and our different operators in the different countries. So it's a very strategic innovation vehicle.
Very good. Jazz, you want to continue?
Sure, thanks. Good afternoon and hi all. For those who I met yesterday and the panel as well as the networking session. I'm Jasdeep. I'm the managing director of InMotion Ventures Studio. That's the venture builder arm for Jaguar Land Rover, JLR. And I think the question is, what's the main goal for the venture studio? So, in a nutshell, like what you just heard, it's to diversify the business. It's to diversify the business model of JLR, and to bring in new sources of revenues, new customers, new cohort of customers, and new sources of revenues for the organization, and really to disrupt the organization from the outside in. And not wait to be disrupted by people external to JLR.
Good, love it. And I think we'll be talking a little bit about what venture capital can do, what venture builders can do that the other vehicle maybe can't. But Raza, maybe you can give us an introduction because you have a broad view across a few innovation vehicles.
Absolutely. Thank you for having me. My name is Raza Ali. I'm the VP of Innovation at IAG. IAG is International Airline Group, so we own a number of airlines, flag carriers like British Airways, Aer Lingus, Iberia, low-cost airlines like Vueling. We want to be the best CVC because we want to be the best airline group. So we want to have the best coverage in the world. We want to have the best airlines and loyalty company in the world. So this is just one arm fueling that. Our motto is that we go beyond our business plan and we invest in future headwinds or challenges. So when it comes to the time, they're actually tailwinds and benefits to us and actually headwinds for our competitors. So that gives us a leading edge. So this is why we go into the future to sort of look where do we invest and how do we make that a reality and a part of our business and not be afraid of that.
Very good, and I like the ambition. And maybe we can start with you, Raza. You announced a new 200 million fund, I think, earlier this year, and maybe you can talk to us a little bit about where that came from and what the board expects from you now.
Yeah, I mean, they expect a lot. I mean, it came from a number of years of work. We'd always been dabbling into ventures because we had an accelerator arm. Then we saw, how do we take a strategic lens with this other than just working with a startup? How do we help guide them and grow them? And then we came up with the strategy of what if we invested at the front in equity and helping them and raise capital and build what they're building out, but also becoming a customer at the end for our strategic benefit. So it is a mini playground where you'll receive investment, then all be introduced to 6 different customers that have a global footprint. And then we spend our time and money nurturing that startup in that organization, then going one further and introducing them to our partners in America, in Qatar, and then to the whole aviation industry because we want it to grow, or travel industry. Recently, we looked at our portfolio. We thought we're doing quite well. Maybe we need to professionalize this, grow the team, and put some real money behind it. Because many people didn't know what we were called before. We were called Hangar 51. No one could associate it to our parent. So we went through a rebranding exercise. We're called IAGI now. So the innovation, investment, insight, it means many different things, but people can relate it to our parent company. And that ambition came from the board that if you're going to do this, we want you to do this properly. We want you to be one of the biggest, and we want you to have the ample resource to go and execute. So that is our mandate, to go and look at these future visions, future strategies, and what is going to come and disrupt us. How do we turn that into a business opportunity, a revenue opportunity, and how do we remain at the forefront? Because some of our airlines have existed for 100 years, but that isn't a given. We need to execute a strategy so they remain for the next 100 years.
Very good. And well, we now mostly spoke about the investment side of things and the CVC side of things. You also have an accelerator program, and I know that at least from your loyalty business, and that might be a bit separate, but you do venture building as well. Maybe you can talk a little bit about what those different vehicles provide and where maybe some of the shortcomings are.
Yeah, and this is the beautiful thing about the strategy and the diverseness of the group, that everything, we celebrate individuality. The loyalty business needs to look at the business from one lens. It is to make Avios the currency of travel. And what they're doing, venture building, is creating short, sharp businesses, looking at the data from the customers and churning out how they can keep retaining customers. It's a very different goal to what CVC needs to do. The accelerator is a bit more near term, where you have closer business problems. How do we get our planes leaving on time? We want to explore robotics. We go and search for companies and bring them in and let them work in the live environment. It's great that you have founders and startups in the US or anywhere in the world remotely thinking about these problems. It's very different when you bring them into the live environment and they get to see how a plane is cleaned, turned around, what are the time constraints on pilots and the community and the workforce, because then they can tailor their product to actually match the expectation, not from what they see outside. So it gives them that learning curve. If they were to do that on their own, that could take 8 to 9 to 12 months. But we accelerate that and we shorten that period, so they're able to build much punchier and meaningful product that's more targeted because they've gone through that change. So those are the various different work vehicles that we have. And they all do link. There is a possibility that venture builder can get investment from the VC arm. There's a possibility that goes through the accelerator and come out with VC investment. But all of them are independently operate as well.
Very good. And it seems like you have a very coherent strategy in place, have the funding behind it, the approach behind it to do that right. But maybe as a last question to you, can you tell us a little bit about where an instance of the past where you maybe had a mismatch between an innovation vehicle and a desired outcome, or other failures from which you've learned to build up your strategy as it is now?
I think communication is really sometimes difficult. We're an organization that is dispersed across the world with many thousands of people. And sometimes we approach the same startup not knowing that they're speaking to 3 different departments. Actually, some people are trying to contract and go through the procurement department. Some people have applied to the accelerator, and we're actually assessing them for ventures. That, we've just tripled the work, and we're sort of wasting time answering the same questions. And unfortunately to the startup, they just want to work with you, so they'll go down any avenue you send them. So that's been a flaw on our part, and that sometimes happens when you're a big corporate. So we're trying to streamline that, have much more open communication, much more collaborative and co-working teams, a lot more knowledge sharing and things like that, but respecting privacy and confidentiality where it exists. Look, a number of key challenges is sometimes a solution in the UK doesn't work in Spain. The environment, the customer is different. We have to celebrate that. We differentiate that in IAG compared to our competitors like Air France, KLM. They spread one solution and that's adopted across everyone. Our customer base is very different, very diverse. We want that brand recognition, we want that brand belonging to come out. And that sometimes make it harder, you trying to expand one startup across 5 different airlines. It's not always the case, but they will always give us feedback. It didn't work because of this, and we'll pass that on to the startup so they can evolve and they can learn and they can take that learning elsewhere.
Very good, very interesting. Thank you. Bruno, maybe we'll move on to you, to Telefonica and to Wayra. And you can maybe tell us a little bit, because I knew Wire as an accelerator originally. This was in Germany, one of my first startups. I went through the Wire Accelerator program in Munich. But Wire here is not an accelerator anymore and hasn't been for a while. You shifted more towards investing, I think. And maybe you can tell us a little bit about the reasons behind that and the goals that you were going for with that move.
Yeah, so we've been an accelerator for almost 10 years, but we shifted away for 5 now. Although not only you, a lot of people still know us primarily as an accelerator. I think different than many other corporations, a lot of our collaborations with startups are in products and services that we are going to resell through our sales team instead of using ourselves. So and incorporating our products, and that's probably like 60 or 70% of what we do. And then over time, the accelerator model tend to attract earlier stage companies that were not ready to be deployed over a large number of clients. So we wanted to move up or move to a later stage, and that was the main reason behind shifting the model from acceleration to investment. We prioritize the strategic engagement between the companies and the business across the different countries, and by doing that, we got much higher rates of engagement. Before, the startups were not ready to engage with us when they joined the acceleration program typically. And by the time they were, eventually either they had pivoted or we have changed as well, so they didn't necessarily align. So that was the main reason behind it.
Very good. And I think this is one of the themes that I've encountered in many of the one-on-one conversations here as well over the last couple of days. How do you build a bridge between a startup that I've invested in and the core business to fill some sort of need, right? And you seem to have found some sort of formula there, because if I understand correctly, you also offer your knowledge about how to set up CVC to other companies in your group or even beyond. Is that right? And maybe you can talk about that and tell.
Yeah, that's right. So we wanted to expand beyond Telefonica. I think we had a model that worked. We have collaboration with the vast majority of the companies we invested, and we do not only core business but adjacencies. So we started doing for group companies that operate independently. We have companies in the Telefonica group that are even listed independently. We start offering CVCs specifically designed for them, and then expanded beyond towards like other corporations using our methodology to support them. And what this gave us is typically an adjacent sector, so it gave us access to more deal flow and more companies that we can also partner with from the Telefonica side.
Very good. And one last question for you. When you meet your CFO in the elevator, what's kind of the one figure, the one KPI that he or she might be interested in and that you want to talk about?
Well, I would say 2, because they always have 2 in mind. One is DPI. I think probably even more than TVPI. They look at how much we're returning, but we track revenues for the business, not for ourselves. We track revenue for the business, and that's what they're mostly interested on.
Very good. Thank you very much. Vijay, let's move on to you. You are, I think, kind of the star of the show, because this is not the first time you're sitting on the stage here, so I assume most of the people here know you already. But you're doing something that's obviously close to my heart, the venture studio model. And I think this is also something that I've heard in a few conversations with CVCs here, that they are starting to explore a little bit the venture building side as well. I think InMotion Ventures has been around for a little while. InMotion Venture Studio is somewhat newer, and maybe you can tell us a little bit about what gave the impetus to introducing that.
Yeah, so InMotion Ventures CVC, when it started, was looking primarily into mobility services business models. I think at the time, Ubers and car sharing was very popular and was exploding as a business model. Multiple OEMs were trying out this business model. So the CVC was set up to find startups that were doing this new business model out there, car sharing, etc., and to invest in them. But at the same time, very soon after that, or a few years after that, we also decided to try our own venture into this business model, and we started off with a small car subscription business that, fast forward today, is actually doing really well. So we stumbled upon a business model that works for our customers, it works for us as well, and that's now informs our future strategy for the company. So we are now specifically going into car subscription as a business, as an organization. And so it's kind of accidentally stumbled into this idea of building our own venture and trying out new business models. And if they become successful, feed that back into the core strategy of the organization. So we thought, why not platformize this capability of informing our strategy by doing, rather than just coming up with ideas on paper or looking at the outside world to build our strategy. So that's how the studio sort of came along. And today our remit is much more than mobility services. We are now looking into, as I said earlier, diversifying the business, disrupting the business. I mean, keeping in line with the topic that was discussed this morning with Toyota, circularity, it's such a large topic and such a, if you unpack circularity across its value chain, there's so many different parts of this value chain that needs to be either invested in through the CVC. Certain areas where, like materials, circular materials, recycled materials, we can't build our own materials company in the studio, but we can go and find innovative companies out there to invest in. But also equally on the other end of the value chain where, if you want to recycle a vehicle or, the purpose of circularity is to ensure that the vehicle is, at the end of life, is fully recycled in some way or the other in terms of parts. But in order to do that, you need to retain that asset with you. If you sell it to a end customer, we do B2B sales, so we don't even have an end customer. It's hard to bring that vehicle back into the fold. So in that case, we also decided, well, then we need to address the business model itself and how we provide that vehicle to the customer. And those are mobility services like car subscription. So we have some areas where we think we should be building ventures like services, some areas in CVC where we should invest in startups that help us unpack this circularity problem. And so, that's kind of where we are today with the purpose of the studio, how we evolved.
And if there's other CVCs sitting out here that are thinking about introducing a venture builder model as well, what is kind of the number one tip you have for them, or the number one thing to avoid?
The number one tip is bring your C-level, have C-level backing. CEO and CFOs are your best friends. If they back it, then it can be successful. So that's the first tip.
And how do you get that?
You got to show your value, right? So we've shown value to our C-level, our board, by having a successful venture. But it's not only the venture being successful in terms of revenue and growth and customers, it's also our ability to inform the strategy of the company, where we should go and where we shouldn't go, perhaps, right? So we always, I always use this analogy a lot, we're a speedboat to a cruise liner. We go out and venture into new territory and come back and inform the cruise liner which direction to go into or which direction not to go into. If there's an iceberg on that side, avoid that route, right? So that is value that we bring back to the organization. And if we can prove that we are bringing that value back, plus, of course, when ventures are successful, we bring in new customer cohort altogether and diversify the business and bring new revenues and enterprise value. Of course, that's a great way to convince your C-level to get it done. So, yeah.
Yeah, and that's, I think, a really interesting analogy there with the iceberg. I think that's a little bit harder to measure and put into kind of KPIs to say, I've been successful here, and make you avoid some of the pitfalls. But that's an interesting angle. I see we're fast running out of time. I'd like to open up the floor for a few questions, if anyone has any, before we close this final session here. I mean, there we go. I was going to say you really get extra points for asking questions at this point of the day, but go for it.
Big points. Thank you. I guess with the venture building specifically, Jazz, did you experience any challenges being in a large corporate environment, finding the people who knew how to think like startups, who could adapt to the way you have to work to build and test a venture, versus maybe the norms and behaviors and typical skill sets in a corporate environment? Was it a challenge? If not, I applaud you. If yes, how did you approach it?
Well, the simple answer is, and I think this question was asked yesterday as well, that's fine. We don't look into the organization for entrepreneurial skills. We specifically go outside to find entrepreneurs. And that's because working in a corporate requires very different skill set than building, a venture from an idea into a business. So we do bring in subject matter experts, for example. So, in the electrification area theme, there will be a lot of experts in JLR who have done deep research into various technologies in electrification. So we will bring them on board to inform the idea and how we steer the startup, but the business building side skills will come from the outside. Absolutely. It's a different culture. And also, a bit controversial, but we can't afford to pay corporate salaries in startups. So, unfortunately, we have to get equity to incentivize people to come in.
And I guess that also means you're attracting a different type of person, right? The type of person who's willing to take the risk.
Absolutely, they're motivated by completely different things, right?
Yeah.
And it's both skills are important, of course. Working in a corporate and building, evolving the corporate business, the core business is a different skill altogether, and different mentality as well, right? The risk-taking mentality of an entrepreneur is very different from, let's say, less risky role in a corporate. Yeah,
absolutely. I see we're out of time, but maybe we have time for one more question, if there is any other question. If not, you get all the points for asking the question so late, but you all get the points for still being here. Thank you very much for a really interesting discussion. I think we could have stayed here for another probably half an hour to discuss that.
I think let's go get a break.
By the time we get a break now, exactly. Thank you very much.
Thank you very much.